Hi, this is Lara at Elliott Forex with your daily analysis for the US dollar for the New York session dated Monday the 16th of August. A really quick look at an historical chart just going back to the end of 2007. We're in a cycle degree C wave, and this is at cycle degree an expanded flat correction. Within this wave C that began here, we're going to expect a 5-wave structure. We've already had 1 and 2, and we're working on 3 to the upside now. Within this third wave, this is going to be a 5-wave structure, and we've had 1, 2, and we're working on the very early stages of 3 to the upside now. This is going to be the strongest part of this upwards movement. A likely target for the end to primary wave 3, which began down here, may lie about 120.59. That's where it's going to reach 2.618, the length of this primary wave 1. And a long-term target for the end to cycle degree C, which began down here, and its entire 5-wave structure when it's all over and done in a few more years, may be about 141.08. Taking you now to a daily chart, just for the last year, where this maroon 2 would be down here if I'd put it, is this right at this point here. Here's our intermediate wave 1 to the upside complete, followed by an ABC simple zigzag correction down for wave 2 black. Working on now the early phases of wave 3 black to the upside. We've got a really obvious breach to the upside of this little parallel channel, Elliott's technique on this correction here. A trend line from the start of A to the end of B, and a parallel copy on the end of A pretty much nicely contains this movement with a really obvious breach to the upside now. The downwards trend is over. We're in an upwards trend that's likely to last several weeks, if not a couple of months or more. On the daily chart, the invalidation point down here at 74.18. Taking you now to an hourly chart, we were just going to look at this upwards piece of movement, and on the daily I have this labelled at pink wave degree, but on the hourly I have it labelled as green degree. I might leave it as this on the hourly chart for the next day or so. We'll see how this unfolds. I may change the degree of labelling here all up 1 degree, but I'll just leave it as it is for now. Within this first wave, whatever degree you want to label it, relationships now between 1, 3 and 5 is labelled as orange here. Wave 3 is just 0.2 short of 1.618, the length of 1, and this wave 5, which is an ending contracting diagonal, is just 0.06 short of 0.618, the length of wave 1. So some fairly decent Fibonacci relationships in there. A really obvious breach to the downside here of this parallel channel, again Elliott's technique. On this impulse I've drawn this first with a trend line from 1 to 3 and a parallel copy on the low of 2. A little bit of a throwover towards the end of the third wave and a throwover in the fourth wave position. Could have told us to expect a likely throwover in the 5th wave position. That didn't happen, and wave 5 ended shorter and briefer than expected. I had an upside target. I was expecting a little bit more of an upside movement to 83.48 to 83.68. Wave 5 here and wave 1 green has ended at exactly 83. We didn't get that last little bit of upwards movement I expected. When I look at this contracting ending diagonal on a 5-minute chart, we can see each subwave can be seen as a zigzag. That's a major requirement, one of the rules for an ending diagonal. All subwaves have to subdivide into zigzags. So this structure meets all the rules and guidelines for Elliott wave. So I expect that upwards movement was over here, and we've got a 1, 2, and working on 3 to the downside now. We should be seeing some fairly decent downside movement from the dollar. At this early stage within the second wave, while we don't have enough to go on to work out relationships, Fibonacci relationships as targets, we'll use the simple Fibonacci 0.618 ratio for the whole of this wave 1 rise as our most likely target for the end to the second wave to end. Second waves can and often do correct to pretty deep degrees, so we'll expect that that's the most likely point, about 81.21 for it to end. When it's at its end, this is probably going to provide a really, really good opportunity for a long-term buy position on the dollar that you might want to hold for a few weeks, if not a couple of months. That could become quite profitable indeed. We should not expect any movement below 80.09 as wave 2 cannot move beyond the start of 1. So some really, really nice Fibonacci relationships up in this 5-wave structure. It's got a really good look overall. It's nicely contained in a trend channel, and there's a very clear, obvious breach to the downside. So we're in a downside trend for the dollar to last probably a couple of weeks. So that's all for me with your dollar analysis, and I hope everyone's having a fabulous day.